Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, nice to have you back in studio, and we'll start off, as we most often do, with the top 40 index, which has been, I suppose, quite frustrating to trade in a way because it hasn't really been going anywhere.
Yeah, look, it's had a few fairly large swings up and down, but yes, by and large, you're right. It hasn't actually gone anywhere since February, really. If you look at that graph, you can see it's pretty much trading at the same level as it was in the beginning of February. So we've gone pretty much nowhere this year, with a bit of volatility up and down in between. But we do often look at this chart just to try and get a lay of the land in terms of how we look in terms of our overall market. And one might debate and say, well, is this really relevant? Because there's so many divergent stocks that make it up, and we've got very weak resources and fairly strong financials and industrials. Does this really matter? But I think it does matter. I certainly watch it. I certainly trade it. And I know a lot of our viewers trade the top 40. And we do tend to take our cue from this when we think about the strength of the overall market. So if we have a look at that, and we've talked ad nauseum over the last few months about the possibility of this big head and shoulders pattern, which now, it starts to look increasingly questionable whether that really is the case or not. And what's happened more recently is the market's really just been chopping around. But if you have a look, what's critical right now is that we're trading right in the middle of the support and resistance zone. The support is at 46,000, as you can see there. That support comes in by joining the lows of that recent uptrend from the bottom of the July low through the recent lows. And then you've got that lateral overhead resistance level at 47,500.
Yeah.
Now, today we're trading at around about 47,000, 46,800, somewhere there at the moment. So we're right smack bang in the middle of that range. And it could quite honestly go either way from here. We're either going to break up through the top 47,500, in which case I would expect quite a big short squeeze to take us higher. Or alternatively, if we trade lower and we break down through 46,000, then it's possible that we're going to have another revisit of the lows again. And it could really go either way. It's 50-50 at this stage. So while that is the case, it's quite difficult to make any significantly convincing trades in terms of directional trades at this moment. And that's why you'll see later in the show the trade that we're doing this week is actually a pairs trade. So we're taking some of the market risk out of the overall market.
Well, let's talk about the resources index, which is having a real tear today. But, I mean, that could just as quickly change tomorrow. So it's having a good day. And the reason I mentioned it is because it's within that complex that you had your previous short position in Sasol. And I was wondering how it actually ended up working out for you, because you were away last week and the share did weaken, but it has subsequently rebounded. So, so what's been happening with that short?
Yeah, it's worked out for us. We took profits on this trade. So if we just go back, this trade was put on about 3 weeks ago. And what I looked at the time was the fact that the stock had actually broken down below this upward trend. It had broken down and it rallied back up. And it was effectively retesting the underside of that previous upward trend. And that was previous support, now becomes resistance on a rally back up. And looking at that, I felt that the stock was looking poised for another leg to the downside. So what we did was we went short of 200 CFDs of Sasol at 435 Rand. And I put quite a loose stop loss here. 451 Rand was my stop loss. And I said at the time that I was looking for an initial move down to 414 Rand because there was a gap in the chart down at that level, but that I felt it was quite feasible that we would see a move all the way down to 400 Rand, and if not even maybe a bit lower. Now, it certainly traded down to our initial target of 414, and it did trade a bit lower than that. It got close to 400 Rand, but it didn't quite get to 400 Rand, and then we saw a fairly sharp move to the upside. And what I did was I ran a trailing stop loss on this. So what I did with the trailing stop loss was I said, well, the share is moving down, but if it were to take out a prior day's high, then I would use that as my trailing stop loss. In other words, it allowed me to stay in the trade as long as the share price was falling. But if it started to move up and it started to take out the previous day's high, then I would look to exit this trade and bank the profit. And that's exactly what we did, and it did work out fairly well. I ended up buying back those 200 CFDs at 419 Rand and 20 cents. which meant that we made almost 2,800 Rand, including costs on this trade. So it resulted in a risk-to-reward ratio of 1-to-1 in the end.
Okay.
And the reason for that was because we set that stop loss very wide initially, and where I got out wasn't at the best level that I could have in hindsight. We got out at 419 Rand, but we still made some money. That profit equates to almost 1% return on capital, which is not a lot, but if you keep chipping away and you make a couple of those every now and again, they do add up.
It's at least a pair of shoes, Garth. Or maybe a shoe.
You've got expensive taste. I don't spend that much on shoes.
But Garth, I suppose, given where Sasol's traded back to, are you happy that you even got 2,800 out of the trade? Because it has moved almost, I think, back to probably your entry position. Yes,
it's moved back up to where we started. So certainly I'm happy that we did get out of the trade and we banked the profit, and quite happy to have banked it and walked off now.
Okay. Well, moving on to this week's trade, as you said, a pair trade, and in a pair trade that we've put on before for the show. So yes. Once again, you're looking at Pioneer Foods and Zeder. Tell us why.
Yes, that's right. So pairs trades are where you take two similar stocks, and you trade long in the one and short in the other. And you're effectively looking to try and take advantage of a discrepancy in the price between the two. Now, Zeder and Pioneer Foods are two very good stocks to use as a pairs trade. And the reason being that Zeder is an investment holding company with assets in the food and food processing business. And its biggest shareholding by far and away is its shareholding in Pioneer Foods. And if you have a look at the table on the screen there, it shows you the constituents of Zeder. Now, this is taken off the Zeder website today, so these are current figures. And what you can see there is that the stake that it owns in Pioneer Foods accounts for 75% of the total sum of the parts valuation of Zeder. And then you've got a whole bunch of unlisted assets there, Cape Span, Zard, Cape Agri, et cetera, et cetera, et cetera. And those unlisted assets then make up the remaining 25% of the sum of the parts of Zeder. So it stands to reason then that you would expect the share price of Pioneer Foods and Zeder to track each other very, very closely.
Yeah.
And if you have a look at this next slide, this is now an overlay where you've got Zeder in blue and Pioneer Foods in yellow. And you can see that by and large, those two share prices certainly do track each other very, very closely. This goes back about a year, this graph. And obviously, if we went back further, you would see that there's an equal correlation going back. However, there are times where you can see the gap opens up between the two share prices. And we're in one of those situations right now, which is quite unusual. In fact, Pioneer Foods has gone significantly above Zeder in this case now. And what it's saying really is that Pioneer Foods is expensive relative to Zeder, or alternatively, Zeder is cheap relative to Pioneer Foods. But the fact of the matter is that that gap has opened up. And that is the gap that we seek to try and exploit, because ordinarily we should expect that that gap will normalize. And if we look at it in another way, you can see that this graph actually plots the ratio of Pioneer Foods over Zeder. So what you do to get this graph, I mean, I know it looks like a messy whole lot of squiggles, but what it is you take the price of Pioneer Foods and you divide it by the price of Zeder, and that gives you a ratio. And historically, certainly over the last 2 years, in this case 3 years even, that ratio has traded between a level of 18 and a level of 22.5, more or less. That's with a few outliers here and there, but for the most part, that has been the trading range of the ratio between the two stocks. So you take the price of Pioneer Foods, you divide it by the price of Zeder, and that's what you use to get to this graph over here. And when it's at the bottom of that range, what you would typically do then is you would buy Pioneer Foods and you would sell Zeder, because what it means is that Pioneer Foods would then be cheap relative to Zeder. The flip side is that when it gets up towards the top here, then it means that Pioneer Foods is expensive relative to Zeder. So then you would buy Zeder and you would sell Pioneer Foods.
Now, and that's certainly where we traded it last time.
Yes, that's right.
That
we traded it in about March of this year, and it was on this previous spike up to, if I can get this mouse to work, there we go, up towards the 22.5 area on that relative. And it came back down, and we actually did make money on that pairs trade last time we did it, and it worked out quite nicely for us. Now we're sitting in a situation where this pairs ratio has actually blown out quite significantly. And if you look at where it's trading now, it's all the way up there at 24.2 today. So it's really, really stretched. And it's broken through the technical resistance, if you want to call it that, on this chart. But to me, that is actually now quite an obvious level to put this pairs trade on again, where you would look to try and take advantage of that ratio and normalizing. And I would expect that from here we could quite feasibly see that pairs ratio come back down to about 21. So the pairs trade that we're doing for today, therefore, is a short on Pioneer Foods and a long on Zeder. And we're looking for this ratio to come back into line with its historical pattern.
Okay, and as you said, there's always two legs to a pairs trade, so tell us about both legs.
Yes, all right, so here you've got it on this table. We've got the Pioneer Foods side of the trade on the left and the long Zeder on the right-hand side. A couple of very important things to keep in mind with a pairs trade. First of all, you have to ensure that the nominal value of the two legs is equal. So in this case, we're doing 150,000 Rand each way. So we're going short of 150,000 Rands worth of Pioneer Foods. We're going long of 150,000 Rands worth of Zeder. That's very important. The other thing is that you have to put the two trades on at the same time if you're trading it as a pair.
Yeah, I mean, otherwise you could just go short the one and long the other.
Exactly. Then yeah, that's it. And the idea here is not to do independent trades in each of the two stocks. You're actually doing a pairs trade. You're essentially trading that ratio between the two stocks, and you're looking for the ratio to move down.
Okay.
So what we've done, we've gone short of 150,000 Rands worth of Pioneer Foods at a price of 205 Rand 20. It means that we've traded 731 CFDs in this case. That's what we've gone short. On the other side against that, we've gone long 150,000 Rands worth of Zeder, and the price here was 8 Rand 53 this morning. The quantity of CFDs is 17,585 CFDs. Okay. And if you look at that, that means that the ratio between those two stocks is therefore 24.05, which is a decent ratio in terms of that historical graph that I showed you a moment ago.
Yes.
What we'd look for now is a stop loss if this ratio should move out beyond 25. Now, you have to have a stop loss somewhere. You can't just leave these things on indefinitely. If it's not working, you need to draw the line at some point. If the ratio moves out to 25 or above, then it would mean that we'll start losing 6,000 Rand, which is around about 2% of our capital at the moment. So I don't want to lose more than that. My profit, we'll take profits if the ratio comes down to 21, which would mean if it got there that we'd make approximately 19,000 Rand on this pairs trade.
Okay, so a nice risk to reward ratio, which you'll probably give us in greater detail now.
Yeah, well, I don't have any more breakdown of this, but that you're right, it's about a 3-to-1 risk to reward ratio. We're risking 6,000 for the potential to make about 19,000.
Okay. Well, we'll see how that plans out. Garthen, what does the portfolio look like at the moment?
It's slightly off from previous weeks, mainly because that Sasol trade that we closed out was, we had a bigger profit on it the previous time we reported back on it. But there it is, the profit, almost 2,800 Rand that we made on Sasol. We still do have this put spread structure on the September Aussie, which runs out until the 3rd week of September. Still quite happy to sit tight with that trade. And then we've put this pairs trade on this week where we've gone short Pioneer Food and long Zeder. You can see that there. So our portfolio is 346,000 Rand at the moment. That's up 38.4% for the year to date, so still pretty good and still very close to high, our high for the year in terms of this portfolio.
Garthen, just one more comment on the pair trade. How long do you have to be quite patient for pairs trades to play out? Or, I mean, you know, does it depend really? It could be fast and it'll re-rate completely, or it doesn't work and you cut out of it.
It does depend. Sometimes they can work out very quickly for you and you can bank your profits soon, and sometimes you actually have to hold on tight for a while. In the case of this one, I'll give it a month or two and let's see. If it hasn't started to work for us within that time and it hasn't either been stopped out or given us an opportunity to bank profits, at some stage we might need to then execute a time stop loss on the trade. But I think where it is now, it looks to me like that pairs ratio is at a blowout extreme, and I'd be quite happy to put it on now.
Yeah. Okay. Garth, so just to end off with, your next course dates, Cape Town and Bloemfontein still?
Yeah, so this weekend coming, I'm down in Cape Town on Saturday, the 15th of August, and I've got a high probability trading course down there. There are still seats available. And then in Bloemfontein, the following weekend, the 21st and 22nd of August, I'll be presenting courses down there. So anyone that would like to attend either of these courses, please email me, garth@traderscorner.co.za, and I'll send you all the information.
Great. Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.